Let's take a look at this trade right here. This was on Monday, on April 11th. And the principal said, watch for the S&P to decline from the current price, which was 44.50, down to 44.25 to 23. So this is a 25 to 28 point decline that this is saying. And at the time, this is what the market looks like, just about like that. That's what the whole world, that's all the whole world knows at that time. But the square principle is saying, wait a minute, we've already run into a very important square and we're going lower, and here is the price. The square principle doesn't just say you're going up or down. It tells you the single exact price you're going to. Now, I want to show you something, and I hope you'll appreciate what I'm showing you here, because I'm going to expand this chart out a little bit. This market, which you didn't see before, was actually coming down already. So when it gapped down and was here, many people, their overbought or oversold indicator would tell them the market's about to go up. But not only did the S&P go down, it went down a whole bunch more. And the square principle was able to understand that it was going to go down to at least 44.25 to 23. Now, note that the square principle is not telling you a whole series of prices. Like, as an example, if I were to take out the Fib indicator, and if I were to do what you may have done or what you may have seen others do, and these aren't even really Fibs, I think these are just in some increment, but let's just pretend, and go like this, then you would have a whole bunch of intervals of price. Or as an example, if I were to take on that day the high, and I can't even figure out how to do it here exactly the way that people would do it. But my point is that you would end up with something that looks like this kind of, where you would say, okay, well, I'm going to short here, and then I'm going to take some off here, and then it might go here, but it might not reach here. But if it does, then it should go here. That's like 7 or 8 numbers. Take note of the peculiar nature of the square principle, that it doesn't utilize a whole bunch of levels to tell you where to get out. It tells you when you're at 44.50 that there is a single target that you're running to, and that is 44.25 to 23, period, full stop. Let's put that indicator away, and let's take a look at a really kind of commonly used indicator called the volume weighted average price. And that's this indicator. Now, this indicator did have the market below it. And by the time the market got below it, it got a whole bunch below it. It was already down to 44.37. But that isn't in itself a sell signal for the volume, for what they call VWAP. That isn't a sell signal directly. There are other factors here. So the VWAP or any other moving average isn't really giving you this specific price of 44.25 to 23. But the square principle is giving that price to you. And when the market gets above the VWAP here, if you were taking that as a signal, it doesn't tell you what price the market's going to go to. And as a matter of fact, in so many, this here was very close to a buy signal, not a sell signal. And by the time you'd moved over, these are just 15-minute bars. Let me get a cursor here. These are just 15-minute bars. You were already crossing over into buying territory for the S&P. Little did you know, or in this case, let's say little did the stochastic know, and this is a slow stochastic, not a fast one. Little did it know that the market actually still had to go down 25 to 28 points, even as it was entering the buy area. So this indicator is not going to do you a whole bunch of good. Let's put it on the chart here in the center. This is the slow stochastic. This signal here, watch for today's session to decline to 44.15 to 12 or lower in the second half. By the way, this is today. This is the very day that you're in right now. This was this morning. This is a 15-minute chart. And this was this morning in our meeting, which begins between, it begins at 8:45. So this is right when the meeting opened. And our forecast was watch for the session to decline from the current price, 44.48, down to 44.15 to 12. Well, in this particular case, a little bit better because the stochastic was up higher, but not actually truly in its zone where you would be selling it, but still it was in a better position. But you'll see when you put these types of indicators up with what the square principle is telling you, that these indicators are amazingly in different positions than what the market is about to do. And let's move over here. Let's take a look at it there. This again is the slow stochastic. Don't worry if you use the slow stochastic, that's fine. Any further successful test of 44.45 will advance to 45.02 to 45.03. And here the indicator was in a good position. The square principle told you watch for 44.45 to 45, any further successful test of 44.45, and they did. They went down to 44.50. That will advance to 45.02 to 45.03, and then 45.08 to 45.10. All that will get done in this swing up. In this particular case, the stochastic was in a good position. So imagine if you used a slow stochastic all these years and were confused by how often it was not correct when the market would go against it, and you knew the square principle, you would then be able to align that when this is actually telling you to go up and the square principle is telling you to go up, you actually have something there to really trade. And many people will eventually not even end up using that indicator, because the square principle very nicely on its own will tell you what the market is likely going to do. But if you want to use that indicator, I would say there's nothing wrong with that at all, if that made sense to you. Let's take a look at even the fast stochastic. You can see on this chart over here, the stochastic was way into buying territory here when the market still had 20 more points down to go. So it is really important for you to see that the difference between a mechanical indicator and the square principle, which is a living, ongoing principle that actually takes in account the new sets of conditions that the market is showing you, the differences are extreme. And the square principle is the only one of any of those indicators that gives you the exact price the market is going to run to.